We are looking at an exciting concept today, which I'm excited to talk to you about, that really delves into more of the day-to-day type of client that most of us deal with, which is the family market. So we will, I love this presentation. It's one of my favorite ones to give. I put a lot of thought into this one. I give it often, so there may be some repeat slides for some, but the ideas and concepts ring true for sure. So for today, we are doing thriving in the family market with customized solutions. Next week is annuity funded life insurance. A lot of that's for children. Then we have the TFSA Maximizer. As always, start 9:30 sharp. We'll be done by 10, and stick around for any Q&A. For an agenda, we will, I'm going to give you a quick update on Empire. I'm going to do the thriving in the family market presentation. And then I just have a couple tips on prospecting in the family market, what's been working well for other advisors. So let's just jump in. Quick update, excited. Yesterday, if you missed it, we now have a Term 25 life insurance contract available. This is a wonderful addition to the portfolio. Especially for the mortgage insurance market. This is a little snippet of showing how competitive our rates are. So we did a great job. The team did a great job of pricing it well. So it's a Term 25 that becomes an ART, an annually renewable term contract every year after 25. So 26, 27, 28, the rates go up. That levels off at 85. You are able to bundle the T25 with any other one of our products, so it can be put with other terms in a layering scenario. It can be added with CI, it can be added as a rider on top of permanent insurance. So very in line with Empire product. We now have a Term 25 that can be mixed in for an overall solution. So great job, Empire, launching our Term 25 life insurance contract. Updates that we've already seen. ADO rider was launched a few weeks back. We're seeing some great interest in that. 10% commission bonus on Empire Life GIF investments. Paramedical services are starting up right around the corner. There will be a backlog on that, to be fair. Won't be business as usual for a while, but we are processing orders and starting next week. And again, take advantage of the critical illness return of premium on death special offer that expires July the 20th. And very important for those of you that do care about earning commissions, there is the summer e-bundle bonus available to you. Empire is giving tremendous amounts of extra commissions out if you do the fast and full combined with the electronic health questionnaire and the electronic delivery process, where you are increasing upwards to 20% more gross commissions per policy. So definitely take advantage of an exceptional offer. People don't really understand a lot of the math on this because it's percentages on percentages. So I like showing this slide. If I did a paper T10, it'd be 45%. The new FYC is 55%. How do we calculate that? It's actually 22.2% of 45% to be exact, gets you to 55. So the gross compensation to the advisor is 22% higher, which is an incredibly high amount of extra compensation relative to industry. So take advantage of a great summer promotion by Empire. They'll go to the end of September. So that was a bit of an update. Empire, in my opinion, is one of the best, if not the best, family market product solutions in the industry. We do tremendously well on the large case market and have unique solutions there. But the day-to-day business, hands down, Empire is on top of the list, in my humble opinion, and obviously biased opinion. Our insurance products set us apart. Yes, we're priced well, and we have similar named products to other companies, but not all insurances are made equal. There are features and benefits that can help you, the advisor, provide solutions to a client that are more customizable. The problem with our family market business, it's very price driven without a lot of value add. By adding the unique features and benefits of our contracts, it gives you the ability to provide something a little more unique and customizable, a little bit more about the what's in it for me factor for clients. So just quickly going to run through a couple product solutions just to get me to my customizable solution that just sets us apart from the industry. Empire is very much about, obviously, price, guarantees, and flexibility. When you look at the Empire products, there's a lot of additional value that you're not going to see elsewhere. And you'll see that in part in the Solution Series term products, our Solution 100, and our Quick Pay PAR contracts. Term insurance is a starting point. Many advisors that are on this call or not on this call that'll see this later see a term 10 as a term 10 as a term 10. But the reality with our contracts, which is so much different than the industry, is none of our stuff expires. Our T10 renews to 100. Our T20 renews to 100. Our now T25 and T30 renew to age 100. It gives your clients an ultimate flexibility that they are not able to get anywhere else, that they have a back-end guarantee and a renewal that you will not see anywhere else. So all else being equal, prices being the same, if I can give my client a lifetime plan versus a price that a policy that expires at 80 or 85, the comparison becomes very simple. So take advantage of lifetime renewals on the contract. This is an example I've given many a time, but just to show it again, if you buy a T20, for example, with Empire Life, anytime the renewal is after age 66, the premium becomes a levelized compensation until age 100. So here's an example of a 46-year-old that hits the 66-year-old age minimum on his first renewal. The renewal, it goes from $49 a month to $716 a month. If I were to project out 21 years later at 67 for a brand new minimum funded T100 or UL, the brand new policy, again, at standard rates 21 years later, would actually be more expensive than the renewal on our T20, which would be the same levelized rate all the way to age 100. So offering your client a back-end renewal that is a very, very competitively priced product. It is way more than the original $49 they're spending, but that's not the comparable. The comparable is the back-end comparison to the T100 UL renewal, that the price is much cheaper. Now, no one's forcing them to take the renewal. They can obviously buy another term at the time. They don't have to take the full $250,000. They can drop it down to an amount that's more meets their benefit or need. But again, it's an option that you have that no other carrier does offer your clients. Again, here's a numerical example of how I can reduce coverages and bring the price down. So, you know, for the first 20 years, it's $49.28. If I took the full renewal, it's $716 a month. But if I decide to only take $100,000 over the renewal, it's $289 a month. If I decide to take the minimum, which is $25,000, the renewal is $75.74. So maybe a bit of a back end final expense plan at an affordable price and keep some permanent coverage on the back end. So you have the ability to lower your premiums down the road if you wanted to not take the full amount of coverage. This is done on the software very simply. Most people don't know this. It's a very obscure button on our software. There's a square beside the face amount, the total coverage amount. If you press this button, it allows you to change your face amount. So for example, here, if I could pick year 23, I have $25,000 of coverage. Now, when I do the illustration, it'll show a customized face amount of $25,000 beginning at year 23, and it'll give you the premium accordingly. So very simple little thing. This is not a very obvious button to the person doesn't use this every day, but a great opportunity here to use a customized solution to show your client maybe a back-end renewal that takes them to age 100. T10. The renewal from age 76 plus is level to 100. So if your last renewal is 76 or older, it now becomes a T100. So again, here's a 66-year-old male buying a T10, which is a very common sale for Empire Life. They're buying $200,000 of coverage for $191.88 a month. It will be very well priced as far as the comparable of the industry goes. They can keep the renewal. They can lower the coverage down. What I did, which was kind of neat, if I kept the premium exactly the same at $191.88, it actually buys me $28,308 of coverage. So an interesting marketing tool where I can keep the price the same, but I can drop the coverage down for permanent coverage after my short-term need is done for the same premium amount. So again, you can do that with the illustrative software I just showed you on the last slide, that I can play around with the coverages and see what gets me to the same premium amount of $191.88. Or I can go as low on T10 as low as $10,000. So great opportunity that, again, unique. If you're going to sell someone in their late 60s term 10 insurance, whether I work for Empire or not, I highly recommend selling them an Empire T10. It just gives them the back end benefit that no one else offers them. So take advantage of a wonderful product there. I've talked about this many times before, and it'll be part of my presentation, the customized solution. We have a real gem in our T100 contract. Our T100 is a non-participating whole life contract. What that means is it has guaranteed values in the contract that's not based on a dividend. It's a contractually guaranteed amount. So you have guaranteed surrender value, cash surrender value, and reduced paid up values, which begin at year 4. Very easy to understand, not complicated, all guaranteed in the contract. Not that it's a better or worse than a PAR contract or UL contract, but it is nice to have everything fully guaranteed without having to worry about any form of variability whatsoever. Typical markets for our Solution 100 are final expense coverage, or low-cost, simple, minimum funded insurance with no complications. So a very common sale for us is here's a 50-year-old male, $25,000 of bury me expense, final expense coverage, $25,000, $44 a month. I could life guide this and probably get something slightly cheaper if I life guide this same 50-year-old male looking for $25,000 of basic coverage. The premium range would be $38 to $50. But the problem, if I were to buy T100 or UL, there's no cash value and there's no paid up benefit. So you pay and pay and pay until the month before you die. Again, nothing wrong with that. We've been selling that for years and years. But if I had the choice as a consumer, would I not rather have some more flexibility where I could pay a competitive rate and I have guaranteed cash built up already by year 20 at $8,000, or I could stop paying and take a reduced coverage of $16,967. So that's year 20, but again, it began in year 4 and continues on until age 100. So I just picked a random year in time. The other area is younger clients that just want a level cost minimum premium or level cost to 100 type of plan, where typically we would default to universal life. Here's a 35-year-old buying $500,000 and an annual premium of $3,760. Again, I could life guide this and see what's available on UL, and it's $3,500 to $3,800. So we're in the ballpark, but the difference is with the UL, if I'm just going to strictly minimum fund it, put the minimum amount required, I have zero cash and I have zero paid up options. Versus looking at 20 years later, as an example, for my 35-year-old, he now has almost $85,000 of guaranteed cash, which can be used from a leverage standpoint. It could be cashed out if he needed it for emergency purposes. If he didn't want to pay his premium any longer, he could take $317,000 of paid up insurance. Again, just so much more value than offering the basic minimum funded cost of insurance. So again, in the idea of this presentation is all about value and showing additional benefits to the consumer. Having these type of large numbers available to them relative to just something the minimum funded will provide so much more extra value to the client. So take advantage of that. Just quickly on critical illness insurance, I love adding CI policies to life insurance. Standalone is wonderful, don't get me wrong, but with Empire, you have the unique ability to add critical illness to any life insurance contract we offer. So you can do life insurance, whether it's term or permanent or PAR insurance. You can add CI as a rider, which I love combining in the same contract. You can put a T10, a T20, or T75 plan as a rider onto any permanent insurance. You can add return premium on death as a rider. You can add, and it's got the built-in benefits such as non-life-threatening benefit built in, and concierge service, which is your kind of best doctor's plan. What's unique about Empire specifically, and what I love to promote, and I wish I could just let every advisor know this, we have a return of premium which is very unique, that is not based upon the base product or of how you get paid. It's based upon the number of years the policy is in force at a minimum number of years. So for example, if you buy a T10, a T20, or T75, you can add return of premium to any one of those options, which is very unique in the industry. All we're looking for and able to cash out or take a return premium on surrender when you've hit a certain age. So example, age 60 to 64, if I were to cancel a policy with ROP on it, I'd get 70% of my money back. So where that opens up the opportunity, and I'm going to get into this in my solution, which is coming up in the next couple of slides, is a T20. So if I'm a 40-year-old, for example, I can buy a T20 with return of premium. I pay T20 premium dollar figure versus permanent insurance. And at the end of 20 years, I'm now 60, I'm eligible for 70% of my money back. Why that is so incredibly unique is two reasons. One, in order to get that type of return of premium with any other carrier, you'd have to buy a permanent contract, so T75 or T100. So of course, you're now paying that much more for the permanent plan just to get your money back in 20 years. So number one, it's less expensive and more affordable for a consumer to buy a CI with ROP, number one. Number two, Empire is so incredibly unique that you can add the T20 with an ROP rider as a rider on a life insurance base plan or a permanent plan. So I can do an Estate Max or T100 or a basic T10 or T20, whatever, and I can add a CI rider, whether it's T10, 20, or T75, and I can add the ROPs on there. So that is CI as a rider is already unique as is. To add the return of premium on top of that is just sets us apart in the industry. So when you're trying to bundle contracts, you're trying to build plans that meet the needs of a consumer, the customization and the ability to add multiple contracts together with the Empire contract is an incredible opportunity that allows you, which I'll show you in hopefully my next couple slides, on how to customize and build a plan for your clients. So I had to give you a bit of that preamble in order to really hit home on the bundle family. So I've given this presentation umpteen times, love giving it. It really stresses the opportunity you have as an advisor to set yourself apart from the other thousands of advisors out there that show the basic premium and not much else to the presentation. By customizing solutions, even for a simple family sale where they just need some basic mortgage protection and some debt replacement, you have the ability to still set yourself apart by building a customized solution. So I'm going to go through the bundle family because I love the idea of bundling coverages together, and we will talk about the options I'm going to do for the father in the scenario. So we have Bobby Bundle, who's 40, a healthy non-smoker, has a regular sales job, earning a good income. We have Bethany, again, 40 years old, earning a government job. 2 children, Bradley and Brianna, and an adult parent, Betsy. So typical Canadian family, age-wise, job-wise, health-wise, the typical Canadian family. Most advisors will sit down with them, do a rudimentary needs analysis. Again, it does the job. So again, you see they have a debt level, they have a mortgage payment, they have upcoming university costs times 2 kids, they have income levels of X and Y, they have some basic savings, they have some group life. So we take all their debt, add it all up together, and we subtract off their insurance coverage, and we come up with some sort of basic needs analysis, which is fine. It works. The family's covered off. Everything is great. So, for Bobby, use him as the example. If the needs analysis says you need $500,000 life insurance after I've added up all your debts and replacement need minus what you have currently in force, and you need about $500,000 of coverage. Maybe to stretch a little bit, we'll buy $1 million to overinsure you. Or if I want to get crazy, maybe do a T20 instead of a T10 to add a little more coverage. And my presentation for a lot of advisors will be a life guide printout. And I still see this today, and I understand it. I just, I think there's more to the presentation where I'll take the top carriers on life guide, or maybe I'm a little more advanced and use LDA, and I'll show life design analysis, and I will show the list of the top carriers there, and that's my presentation. As a consumer, do I feel as though that presentation provides any form of value beyond just, running a quick comparison of what's available to me as a consumer that I can purchase? I'd argue not getting a lot of value out of that, in my humble opinion. So where I'm going with this, and ultimately where I'm imploring you to spend some more time, and happy to talk about this with you anytime one-on-one, is spending some more time and showing some more value in terms of our recommendations and discussions. So in speaking to Bobby, yes, he needs life insurance, but what is it for? He is a big piece of his overall want when I'm having a need for his discussion is a replacement of income. So let's say he's comfortable replacing 5 years worth of his income. So I use a term 10 contract as an income replacement product. So he knows in the short term, while the kids are still young and the mortgage is still high, that I can replace my income for 5 times of the take-home pay with a T10 life insurance. So that's my mortgage or my income replacement product. Number 2, I'm going to look at my mortgage, ensure that if something were to happen to me, the family stays in the family home without having to sell off any assets. So in that case, I could use a T20, or I put on a brand new T25 for this example. So I put a T25 contract in there for $250,000. This is my mortgage product. So again, from understanding and logic of what I'm purchasing, I can buy a T20 for this individual, T25. Bobby said to me, like, life insurance sounds great and I'm happy to do it, but what happens when I get sick? What do I have then? Life insurance doesn't pay me, right? Correct. So we have critical illness insurance. And if you've heard me do a presentation before, you've heard me say the analogy of how to do offer CI. I always make it a factor of take home pay or mortgage payment. So what I mean by that is everybody that has a standard salary job knows their take home pay every 2 weeks or every bi-monthly or whatever or monthly. I take that amount and multiply it by the full year. So if I'm getting paid twice a month, that's 24 payments a year. I'll take my take home pay times 24 months, and I'll get my take home pay for consumer for coverage amount. So I'm gonna, in this case, it's $50,000, which would match Bobby's take home pay for the year. So what he's hearing me say when I'm doing this presentation is, I am matching the amount of coverage he lives on, fully paid out after a 30-day survival period if he were to become sick, allowing him to recover, get better, hopefully, at his pace, whether he gets paid by his group of benefits or EI or any other supplementary benefits out there. So the CI is something in his head that makes sense, that I get paid and it equals what I live on in a given year. If he thinks 1 year's not enough, do 2 years, do multiples of years, as if that helps with the presentation. Number 4, but I don't want all my insurance to expire or to renew at too expensive a rate. So we want to put some long-term value. So I'm putting $50,000 of T100 in place to get some final expense coverage. So again, I'm putting protection in place, but by layering and doing different coverages all in the same plan, I'm very much staying within a very budget-conscious sale for Bobby. So visually, what it looks like is something like this. I love showing the idea of coverages coming off. What I mean by that is a consumer will always see the price renewing after 10 years or 20 years. But what I'm actually going to show them is after 10 years, you no longer need the T10 theoretically if your needs stayed exactly the same, and you can drop off your T10 coverage. After 25 years of the mortgage is paid, you can drop off your T25 plan if you no longer need it. Your CI after 20 years, if you don't want it any longer, you don't want to take the renewal, drop that off. So your premiums actually diminish over the years as they go along, leaving you with your T100 for long-term planning. So visually nice to see your price is actually coming down over the years versus going up. So nice to see there. Mathematically, let me just skip that slide. It looks like this. I did income replacement for T10, which is going to equal $13 a month and 95 cents. My T25 is $35.78 for 25 years. My permanent life insurance at $50,000 is $48.96. My CI, in case I get sick, is T20 for $50,000 with return premium on surrender and expiry and death, which is $54.37 a month. And the overall premium is $157.56, which again is going to carry him for a length of his adulthood as his children get older and his needs do diminish over the number of years. And sorry, this is what the illustration would look like. I just did a snippet of matching the T100, T25, T10 all into an illustration. Where the ultimate end presentation, after all the preamble, where this comes from is the what's in it for me factor. So when I present this to the client, and I've done this presentation many, many times for my own clients, it's a matter of I've done what I need to do. I've put the coverage in place, but there's a little bit of the what's in it for me. How does this benefit me after I've protected my family? So let's fast forward down the road. Let's fast forward to, when Bobby's a little older and hopefully life has gone on and he's paid his premiums and never made an immediate claim and stayed very healthy, luckily. So down the road, step 1, let's say 20 or 25 years later, he can cancel off his coverages or continue on. Remembering, if he does, as 20, 25 years later have gone on, his mortgage is hopefully paid, his kids are out of the house, hopefully, and debts have all hopefully come to an end. There's nothing that he needs the term insurance coverage for, but he can just keep the T100. If he felt more comfortable, he could convert a portion of his T25 to permanent, or a CI that's also convertible T75. So if you want to continue on with the coverage, the good news is in this plan, he needs to know he has lifetime protection in the conversion privilege, that as long as he has that coverage in force, we can never take away his contract as an insurance carrier because it is always convertible and renewable for the life of his contract. And again, T10, T25 is also renewable to H100 as mentioned. So from a pure coverage standpoint, down the road, he's covered off himself from a coverage standpoint and make sure his family's protected. He's done the selfless act and protect his family. Now, What I do like is number two, is if I look down the road, you're 20 or 25, to kind of show options for what he can get out of this thing. If he was lucky enough that 20 years down the road, his life has been healthy, he's been blessed not to be sick, he's never, there's no claims in his contract. He now has the option of deciding, do I want to get rid of this thing and cash out? Do I just want to exit out of this plan altogether and decide that I've done enough, my kids are out of the house, I have no more debt, why not just get some money back out of this product? Remember, the T100 had guaranteed cash, and the CI has a return of premium. So here's a couple snippets where at year 20, I have $10,697 of cash by my T100, and I have in my CI return of premium on surrender maturity $9,134. If at year 20 he decided to walk away from all his coverages, not my recommendation of choice, but it's nice to know he has that as an option. He could walk away with just under $20,000 in return of premium, which would be about 53% of what he's paid. So as a projection and as a customized solution here, showing more value as a consumer here, now I have the opportunity to get back a chunk of my money versus just quote unquote paying without no end benefit. So as a positioning the products go, number two is my exit strategy. So I've done now continued coverage and I've an exit strategy. Number three kind of positioning of product is my hybrid of both, where I'm going to stop my payments and take it as CI ROP. So if I don't want to take out the cash, I want to keep my T100 in place, but maybe I don't feel like paying any longer, I can stop my premiums and take my $32,475 of paid up life insurance. So again, if I were to compare this, if I were to have done a UL, go back a few slides, or a minimum a basic T100, I have the zero cash and zero paid up values. There's the pay and pay and pay. Positioning Empire Solution 100, I have the ability to stop paying, and here's a snippet again. So at year 20, $32,475 is paid up value. I can stop paying and have $32,000 of insurance for the rest of my life. Also, if I wanted to not take the renewal on the CI, I could cash out my T20 and get back now 70% of my money. So I get the best of both. I have paid up coverage and I have some money back of $9,134. So summarizing all three, as a consumer, if all I did was put in front of you a Life Guide printout of cheapest T10 or T20 I can find versus a fully customized solution that shows you the ability to not only protect your family, which is the need that you're after in the first place, it gives you exit strategies where there's cash on the table if I decide to take advantage of those, or some hybrid method where I can stop payments and take critical illness return of premium. As a consumer that is layman to insurance, never bought or bought very little, don't really understand a lot, having these type of guarantees and customization in the family market provides way more value add to the consumer at the end of the day and sets you apart as an advisor to provide something a little more customizable in its presentation. So hope that gets the message across. With our Envision software, this is all easily made and built. I'm just going to quickly show you what this looks like on my Envision software. So I already have Bobby Bundle created here. So Bobby Bundle, he's a 40-year-old male non-smoker, standard rates. If I put my basic coverage in here, I have $50,000 of T100 values. I have a rider here with T10, T25, T20, and this is, sorry, I didn't update the T25, and I have a CI here for $50,000 and showing all of them together. I'm going to then open up my illustration, which I've already got opened up for you guys for the sake of time. I'm going to put Bobby Bundle here. And again, my T100, T25, T10, and T20 CI with ROPs as an option. And again, just going through my guarantees as I showed you before. So there's my cash value guarantee, my paid up value guarantee. Scroll down, I'm going to add my CI, CI product with return of premium, $9,134, and then ROP on death is the new column available on the contract now. So that was a bit about the customized solution. I'm just going to give you two more slides, maybe a couple minutes long here, but again, very passionate about this topic, and I think I want to spend a few minutes to make sure that you guys all had a chance to see what I find very useful and helpful to the family market. Just three quick slides on what I'm seeing prospecting-wise work for advisors right now in the new normal, the COVID-19 environment. Most advisors with in-force blocks are finding treasures in their own block. I've coined the phrase "reckon your block." What I mean by that is the three is looking at renewals, looking at policies coming for renewal, looking for rewrites and opportunities there. Exchange options. If you have any T10s in your block, you need to be looking at them for exchange purposes in the first 5 years. Opportunity to extend coverage, rewrite coverage, even open up conversations. Conversions, if you're hitting expiries, they're about to expire. For example, Empire's age 65. You want to have those conversations. You want to begin estate planning now. We talked about it when we sold you this T20 12 years ago. Let's look at converting some of my plan. Or the end of my reckon is just revisit the contract for new policies. Review needs, maybe upgrades, maybe they've changed their need level. Reset, restart coverages. T10s that are in force for 5+ years, maybe we do a replacement. T20 that's around the 11+ year mark, we do a T10 or T20 replacement opportunity. So working your own block is a major opportunity right now. Number one. Number two, online presence. Prospecting. A lot of people are stepping up their social media game. Facebook, LinkedIn, direct contacts. LinkedIn, using direct contacts with LinkedIn is a wonderful opportunity to connect with the right people. Putting on webinars, reach out to your MGA or us at Empire. Happy to work with you on doing a client-facing webinar if that helps you. If you are a good supporter of Empire Life, more than happy to bring in our estate and services team to help maybe do a concept of some sort that it's more client-focused and client-driven. And the last thing that I see a lot is those with strategic relationships. The last kind of way people are adapting to the new world is aligning with larger databases. What I mean by that is if I have a limited amount of clients that I can naturally prospect, if I align myself with the right people, I have opportunities to open up my breadth or my width of opportunities of people to speak to. Home and auto insurance brokers, home insurance specifically, great ways to talk about mortgage insurance. Anyone with a home insurance sale would home insurance product would be part of the application. It would show if they have a mortgage. So great open door opportunity there. Mortgage brokers, of course, they are right at the forefront of doing mortgages and hopefully not selling the creditor insurance. Great opportunity to work with mortgage brokers. CMHC is tightening some of the rules, so we're going to have a big spring season for housing sales. So take advantage of those opportunities. Accountants and bookkeepers, we just went through tax season, personal taxes, high tax rates, OAS callbacks. Anyone's aware there's some opportunities that they're maybe paying more tax than they should. Personal or corporate, maybe we can reallocate some funds towards insurance, maybe do a little bit of estate planning. Retiring advisors. I'll be honest, in my very humble Mark-only opinion, a lot of senior advisors that have been in business a long time or struggling advisors are not coming back. There'll be a lot of blocks up for sale, so looking at taking over blocks and having those conversations. Or lastly, other advisors, partnerships, different specializations. A group advisor doesn't want to do individual insurance. An investment advisor doesn't want to do individual insurance. Great specialized partnerships potentially out there. So as we're all trying to adapt and build the new normal, great opportunities to think outside the box. Think that something that may have worked 12 months ago, even 6 months ago, may not work today. We need to continue to evolve and expand. I've done it. Everyone's advisors have done it, and we're all learning as we go, me included. And these are just some ideas I wanted to pass along to help many of you out there. So anything I can do to help you individually, if you want to bounce some ideas off me or Jordan, you're welcome to contact us, and we are always here and available to help. So as a review, I gave you some updates of Empire, the big one being the T25. Thriving in the family market. Just my last quick soapbox comment on that is customize, give people more than the basics. Don't simply just throw them a life guide quotation or summary of the top 10 price. Customize solutions, take advantage of Empire's unique products, T100, bundle of other term contracts from a layering standpoint, CI with return of premium, all great features that are very unique to Empire Life, very client friendly, and I'm completely confident provide more value than the average insurance carrier out there. And lastly, if I give you some ideas to help your prospecting, that's wonderful. Happy to talk through some ideas with you if and when you have some time. That was Thriving in the Family Market, my 4th of 6 Concept Corner. I thank you for taking the time, and the presentation is now complete.